record. With us now is Peter Schiff, Euro-Pacific Capital CEO and Chief Global Strategist. Peter, I want to get you a comment, first of all, on this breaking news from Der Spiegel that in fact, the ECB is coming to an agreement with the Germans over this new plan that national central banks will only be allowed to buy the sovereign debt of their respective countries. That way, if one of those countries goes under, Germany isn't left holding the bag, or at least paying a portion of it. What do you think of that plan?
Well, I think it's better than just doing full-blown QE. I think this will limit the scope of the quantitative easing that the Europeans can do, and Europe will benefit from that because quantitative easing is the wrong medicine. It makes all the problems you're trying to solve worse. We're going to find that out the hard way when the Fed is forced to launch QE4.
All right, let's talk about inflation now, because, of course, the Fed wants inflation, Europe wants inflation, the World Bank wants inflation. I've heard the arguments about deflation, why it's so bad for us, but are falling prices really that bad?
They're not bad at all. They're good. I mean, everybody is talking about the benefit of falling oil prices, how consumers catch a break. It's like a tax cut. Well, that's the same thing when the price of anything goes down. And if the price of everything goes down, it's an even bigger tax cut. So we all want to buy more. You know, you said the central bank has a goal of inflation. Most people's goal is to be able to buy more, not buy less. The real reason that central banks want inflation is because they can't afford to repay their debts. And so they want inflation to wipe out their debts. They don't have the integrity to do it honestly, so they do it dishonestly through inflation, but they have to create a pretense to create it. So they lie to the public, say inflation is necessary for economic growth when it's not. It's actually detrimental to economic growth.
You are saying that the central banks essentially are bailing out the big governments who are not doing the necessary things to get the economy working. They're trying to do it artificially through monetary stimulus.
Absolutely. They're bailing out the banks, and they're hoping to prop up financial markets, right? The stock market wants inflation. The real estate market wants inflation. But economic growth does not need inflation. In fact, inflation is deterring economic growth. That's why the real U.S. economy is actually, going down as the markets are going up.
All right, let's talk about another sort of disconnect that usually doesn't happen but is happening right now, gold, and that's a specialty of yours, of course. For decades, when inflation came down, so did gold. Gold was ahead against inflation. We now have inflation coming down, but gold going up. Why?
Well, I don't think inflation is coming down. I think central banks around the world are creating it. You know, the price of gold is up more than 10% in terms of euros in the last 2 weeks. And, of course, it's up strongly in the dollar as well.
Peter, let's just hold on a second. Oil is going down. The dollar is going up. But gold is going up as well. That is not usually something that happens. Why is it happening now? Quickly.
Well, all currencies are being debased. So, yes, the dollar is going up, but only relative to other currencies. But all these central banks are creating too much money. Yes, oil prices now have fallen. They had risen rather spectacularly. I think they're going to rise again when the Fed, takes these rate hikes off the table.
But Peter, I'm going to try one more time. Yeah. You're missing a big one. The color of my tie, gold. Why is gold going up right now?
Because people need a safe haven from paper money, from fiat currency. People want to buy something that a central bank can't create. That is going on. And, people are talking now about the Swiss franc. I said from the beginning that the Swiss were going to have to pull the plug on this peg because I said it was a mistake from day one, that they would have to end it when they got tired of throwing good money after bad. But what everybody has to look is not in the rearview mirror, but look ahead. Look at the big peg, the China and the dollar. When we launch QE4, I think the Chinese are going to have to pull the plug on that peg. And when the dollar goes down the drain, it's going to be much bigger. It's going to be much bigger shockwaves in the financial markets than what the Swiss did to the Europeans.
Peter Schiff, Euro-Pacific Capital. Thank you, Peter. Have a great weekend.